Money FM 89.3. Best of breakfast. Companies to watch.
And I like this morning's topic because it's right up my alley. It's something I drink every day. And helping us out this morning, Dan Ko.
That's right. Good morning, Ryan Huang. It's something to keep you up, especially on a Monday morning. Well, welcome to Companies to Watch. This is a segment where we find out whether the company that we're talking about is going to be hot or not.
It's going to be hot, right? Because it's coffee.
Yeah, you are a huge coffee fan, I see, Ryan.
Quite a bit. I have 2 cups every morning at least. I think I've got... Yeah, I'm on 1.5 right now.
Double, triple shot?
Just one shot, one at a time. Just
I see.
Savor it.
Nice, right. And we're turning to Starbucks. Are you a huge Starbucks fan?
I'm okay with Starbucks. Like, if it's there, I'll take it. It's not at the top of my list, but it's quite decent.
What's the top of the menu for you?
Oh, good question. It's got to be one of those fancy brands that have popped up recently. There's Composed Coffee. There's also, I believe, Kenangan. Yeah, I like trying new things, basically. Coffee Smith, it's a popular favorite I like.
So it's not like the regular coffee that you would pick, right? Usual ones, so the usual culprits on their menu, right?
Usually boutique ones that are not chains. And I think that really has different type of vibe.
And not overpriced as well, as some might say.
That too.
But yes, companies to watch for today. We're talking about Starbucks. And for many of us, it's not just a coffee. It's almost like a part of us.
Yeah.
I mean, that green mermaid logo is practically a global symbol for caffeine, capitalism, and maybe even comfort as well.
Yeah.
So, yes, lately it seems like the coffee chain is making news, and that's on the back of store closures and a $1 billion restructuring plan that has investors and customers like us asking, what's brewing at Starbucks? Well, just recently, the company announced that it will lay off about 900 corporate employees, that's non-retail, mostly management and support staff, and shut down hundreds of underperforming stores across the US and Canada. Now, Ryan, this is the second wave of cuts this year in barely 7 months. So back in February, if you remember, Starbucks already axed about 1,100 jobs and trimmed unfilled roles. So while Starbucks has about 361,000 employees worldwide, now the vast majority of them work in stores, and as of last year, they had about 16,000 non-retail employees. So between the 2 layoffs announcements this year, that's roughly about 12.5% of the corporate workforce.
Yeah, I think it's not a big surprise if you have been following the fortunes of Starbucks. So much competition, and they've been going through a bit of a slump, and now, of course, they've been trying to turn things around with a new CEO. He is Brian Nicole, and he was formerly from Chipotle, and he did a pretty awesome job at Chipotle, so he was poached from there. And in the efforts, as you normally see when you have a new CEO, things will change, and he is changing things.
Yep, restructuring is the name of the game. We're talking about a $1 billion restructuring plan. All in the name of tightened costs, simplified operations, and of course to reignite customer love for the brand. So why are they slimming down, you ask? Well, sales are relatively soft because same-store sales have fallen for 6 straight quarters in key markets. Now, consumers are pulling back on the extra $7 latte when budgets are currently quite tight. How much would you be willing to pay for a cup of coffee, Ryan?
Yeah, I think it's really stretching these days. It just gets a bit more expensive. Every other few months, you see maybe a price increase. So you are inclined to kind of drag it out a bit more, sit in your seat a bit longer. And I think that's also something Starbucks is quite aware of. You have folks just sitting in the stores for no reason, like opening their laptops. So that is something that I'm really feeling in terms of same-store sales.
Yeah, certainly so. Now, in the third quarter for financial year 2025, global comparable store sales fell by 2%, driven by a 3% decline in transactions in North America and partially offset by about a 1% higher ticket size. Costs are high, leases, labor, supply chain, and when sales drop, margins start to shrink fast as well. So, Nicole wants a reset in the strategy. He's pushing for what he calls a back to Starbucks vision. Less menu clutter, better customer experience, and redesigned stores. Now, when you go to Starbucks, what kind of vibe does it give you? Is it more of an experience, or are you there for the coffee, right?
Yeah, it has become such a different place when it first started. Now it's become more of a place you hang out.
Yeah.
To study some folks, and to just talk to your insurance agent or whatever, just to hang out. It's like a third space.
Yes.
Not so much a coffee. It's like a place to meet people. Like, hey, let's meet at Starbucks at wherever street, right? I think going back to his back to Starbucks vision. We have seen how these apps have come up and how all these customizations have also come about, like double shot, triple shot, one more dose of whatever toffee flavor, right?
Yeah.
It really slows down the entire process of you waiting for your coffee. I think he's quite mindful about it, and also from the barista point of view, it gives them more stress.
Yeah.
So I can get where it's coming from.
Yeah, it's quite tough. I mean, amid all these changes that we're seeing, especially since how, they're constantly just pushing out for lots of new menu items in hopes of bringing in more customers. But yes, it does seem like the back to Starbucks vision and the experience they're trying to offer might or may pay off in the long run, but it remains to be seen. So earlier this year, Starbucks cut about 30% of its menu to speed up service and refocus on its core drinks. And they've also phased out, their mobile-only stores and reopening them as full cafes. And that's a nod to the idea that Starbucks isn't just about the coffee. After all, it's all about the connection. So here's the quirky part, Ryan. Starbucks built its entire empire trying to convince us that coffee was just more than a drink. It's, after all, an experience. So people happily paid a premium for not just the caffeine, but of course the comfy chairs, the music, and the smell of beans roasting. And now, the very thing that made Starbucks special, the store experience, is what they're trying to save. So the irony isn't exactly lost on anyone. Some might say that they grew too fast, chased too many new concepts, and now they're trimming to rediscover Starbucks again. So according to data by Placer.ai, visits lasting over 10 minutes increased by 13.4% at small coffee chains between 2023 and 2024, while visits declined by 8.9% at Starbucks.
Yeah, I'm not sure if that's a bad thing, because you kind of want a turnover to be happening. Otherwise, you're going to have a customer stuck there and just taking up space.
That's one, but it also could mean that maybe not many people are visiting as much. There is the reliance on people coming in, the foot traffic, but it also suggests that consumers may be gravitating towards more boutique experiential cafes rather than big chains. Same goes for yourself, right?
Yeah, it's all about experience, the vibes.
Yeah, and perhaps a new experience from what other boutique cafes may be able to offer. So to answer to that, Starbucks said it will return to growth mode and it plans to remodel more than 1,000 locations. The new look for Starbucks might feature cozier chairs, more power outlets, and warmer colors.
Okay.
So Chinese coffee chains that we're seeing making moves overseas might pose a challenge to them. For example, Luckin Coffee. Have you tried that before?
Yeah, quite popular, but not on my list as well.
So they've opened in US locations with tech-forward low-cost formats to challenge Starbucks in convenience and pricing. In fact, Starbucks were forced to reduce prices on their iced drinks by about 5 yuan to respond to fierce competition from domestic chains like Luckin and Manor. So in short, it does seem like they're facing multiple pressures from different fronts, from the likes of traffic erosion, aggressive competition, as well as shifting consumer preferences, even as they're trying to tighten their own operations. So let's talk about the bull case. Well, a leaner footprint could likely boost profitability and focus resources on their higher performing stores. And with them trying to streamline their menus and operations, that might likely improve speed, quality, and brand loyalty. And at the end of the day, let's not forget that Starbucks has unmatched global reach, with plans to open 17,000 new stores by 2030. So their long-term growth potential might remain strong. But then again, the bad case for this company would be the fact that its $1 billion in restructuring costs could likely weigh in near-term earnings. Consumer behavior is shifting towards boutique, and that's a trend that Starbucks certainly can't ignore. Now, the union pressure and layoff risks damaging morale and brand image, and for them to execute, certain operations like closing stores, refreshing menus, these still hold significant risks that they need to stomach if they're looking to perhaps just revamp and take on a new restructuring plan. So, having considered all the factors, Ryan, I guess, with the move towards a restructuring plan, a $1 billion restructuring plan, I'm probably going to go with a not for now.
What
about you, Ryan?
I think I'll join you there. Have you heard about Starbucks trying out new flavors like boba in their drinks, like
No,
pearls? Yeah, that's what they've been trying in the US at least. So new flavors to try and bring back the crowds to some extent. So I'm not sure if that's going to work.
I don't know how it's going to fit, because when you think of boba, you often think of tea more so than coffee.
Sometimes, yes.
Yeah.
Also, the flavored drinks. So we've got things like cool berry, raspberry flavored pearls to go along with your different drinks that they might offer from time to time. So it's a new spin, I suppose, on what you might expect from Starbucks, which is perhaps what they need to kind of, appeal to a new audience or a new demographic.
Yeah, I guess if you could ride on that boba tea trend, that might work well for them. So it remains to be seen, but we'll keep this stock closely watched in the next few weeks and months ahead. As of the 29th of September, we've got Tipranks, Yahoo and Barron's giving it a mixed rating. Some are saying buy, some are saying hold. But that would pretty much wrap it up for analysis of today's Stock in Focus, Starbucks. Okay, Ryan, here's some fun facts about Starbucks. Do you know how it got its name?
Oh, I think it was from a movie. Was it Moby Dick?
Yes, very good, Ryan.
Vague memory of it.
Yes. So one of the co-founders had an advertising partner who suggested that the word start with ST, because that felt powerful.
Okay.
So then he came up with Starbo, an old mining town, which reminded him of the character, and leading to the final name Starbucks. And did you know that the mermaid isn't actually a mermaid on its logo?
What is it?
It's actually a siren.
Okay, yes.
So it's super controversial, but when it was first established in 1987, the siren was, let's just say, not clothed and had things that people were not very happy about. So in 1992, they changed it to be a little bit more covered up, and that's why many associated it with a mermaid.
I see.
Yeah, so what does a sick person get from Starbucks?
Coffee?
Very good. A coffee.
Oh, okay.
And why did the coffee lose the lawsuit?
Why?
Because it had no legal grounds.
Okay.
And that's all we have for Starbucks.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.